Hello, everyone. Welcome back to the show, Miguel Sanchez World. Today, I'm going to be talking about market dynamics, like understanding this whole market idea, the ups and downs, teach you how to ride the waves, because it's always going to be up and down forever. It's just like our heartbeat. It's like the ocean. Markets are always going to go up and they're always going to come down. The more you understand that, the better you off you'll be financially. So I just want to go over what I believe is happening right now, what I think could happen in the next few years. Again, not financial advice, just telling you what I've seen. And you could look yourself in the charts and see what's happened in the past. And then also you have to start figuring out what you believe is going to happen, right? So this is where, like, again, the whole do your own research, got to start understanding what's research. And now with tools like ChatGPT and even Google, there's really nothing you can't learn or understand more. It's just about understanding what questions to ask an AI or a search engine, right? So, today I'm going to be talking not only about crypto, but other markets, right? I'm building a startup and how that works. And that's a market that I'm targeting as well. So there's all kind of things you got to really understand. But first, we'll start out with the sponsors. The first sponsor, of course, is Retire Your Bills. Retire Your Bills is a course and community that I've created to help people learn how to not only ride these waves, but use their bill money, the same money they use to pay their bills, to invest in the markets. So not only will you be paying your bills, you'll be taking that same exact money and growing it over time, and hopefully in a short amount of years, who knows how long that will take, you will have many, many years of your bills saved. So go to retireyourbills.com if you want to check that out. We are closing the community tonight. If you get to hear this before before it closes, I hope you register and get in there. But next week we're going to start the first cohort. But don't worry, if you don't make it, we're still going to do more of these. It just may take a few months before we get to do the next one. I'll still keep making content, and I'll be going a lot over all of this stuff on social media either way. So sign up for the email and then register for the course and community that starts next week. I'm closing it tonight, probably more like tomorrow morning. So hopefully you get in there and we work with you to retire your bills starting now. Second sponsor is MetaBronx. MetaBronx is a startup accelerator that also brings youth from the community and gives them paid apprenticeships at those startups that we help accelerate. Today, I was just at a high school in the Bronx called BASE, Bronx Academy for Software Engineering, where a lot of our best students have come from, our best apprenticeships, students that have great technology skills and are still working on startups with us to this day. And we've been working with that school for many, many years. So I was at their career fair just a few minutes ago. The grind is real. But again, if you want to help MetaBronx, go to metabronx.com/invest and donate to our program to see it continue to flourish. And then last but not least, Hip Hop. If you are in the hip hop community or you have a business or a music career that targets the hip hop community, you may not know this, but you can buy a .hip hop domain name, right? So that means you can point your fans, your business, your customers to a .hip hop domain name, which is going to be the future of storefronts, right? So if you are an artist, or like I said, someone who's planning to target the hip hop community or work within the hip hop community, you're going to want to own your .hip hop name. So go to get.hip hop to get your hip hop name. And on that note, let's start the show. All right. So first things first, right? What is a market? When I say, let's maximize the markets, the market dynamics and understand supply and demand, what is a market? A market is supply and demand, right? So what that means is, if we want to, let's think about one of the main markets in the world that everybody understands, the stock market, right? Everybody knows the stock market. What is that? That's a place where people are selling stocks. Simple, right? Okay, so there's a place where people buy and sell stocks, the stock market. If you go to the supermarket, right, that's where people buy groceries, right? Food. Markets are places where people buy and sell things, right? Okay, so everything is a market. We all interact with markets every day of our lives. But once we understand how to use them for our benefit as either entrepreneurs, investors, we start to really like ramp up our money making potential. So a lot of what we see right now is the crypto market consumption of brands, services, and goods. Yep. Eric, thanks for that. So basically, the crypto market, which is the one that I've been really targeting because I see the opportunity for people who haven't traditionally been able to do things in places like the stock market. If you really think about it, Robinhood was one of the first apps that allowed regular people to buy stocks in the stock market. And the way they did that was by fractionalizing a stock share. So you can buy $1 of Google instead of before you having to buy a full share or more to even be able to buy stocks. And you also had to have a broker. You had to, be rich. There's a whole bunch of things that most people weren't able to be in the stock market. This is all within the last 10 years. Robinhood is not even 10 years old, or it's just 10 years old. So we're talking about in the past 10 years, regular people have started to be able to be in markets where you can buy and sell and trade. So now that we're in this world, we need to understand it, right? And when you think about the stock market, how it all works, let's start from the beginning. I have a company. I'm building a startup right now, right? So if I was taking the traditional route, what I would be doing right now is I will be accepting investor money to help me build my startup, right? So I would take in this investor money. How do these investors get paid back though? The way the investors get paid back, and this is what we do at MetaBronx, is the company gets to a position where somebody either wants to buy that company or that company goes on the stock market. So if I'm an investor early on and an investor invests in my company right now, it's at the lowest value it will ever be right now. So they give me money, they buy shares in my company right now. So let's say they buy these shares for I'm going to make the math easy, $1 per share. And they give me $1 million right now to own 1 million shares of my company. And now they have 1 million shares. Fast forward 10 years from now, this company's worth $100 million, let's just say. And now we go to the stock market. And now what happens is when my company gets to the stock market, these first investors that bought 1 million shares for $1 can sell them to the public. So now, most likely by that point, these shares are worth a lot more. Let's say they're worth $50 a share. Now, those early investors go on the stock market and sell the shares to everyone in the public stock market, making $50 per share for something they paid $1 per share for. That's how the stock market works with traditional business. And that's why it's good to invest in companies early, because what happens is by the time it reaches the stock market, that's where it's made most of its gain, right? So if I'm an early investor and I invested in the first round of funding of that company, I bought the shares at the cheapest possible price, but I also took the biggest risk, right? So that's a big thing about markets. Things are cheap when there's more risk. What you got to understand is you got to learn how to either de-risk the investment by understanding what you think is going to happen, or a lot of times it's just you're going to be lucky, right? So this is why I believe crypto is such a big market to get into. Multiple things. First, these companies or crypto platforms or coins, whatever thing you're looking at within crypto, they all are very, very early in the cycle of not only themselves being companies, but also the entire market of crypto. Crypto is very new. The entire crypto space is less than 15 years old. The stock market is over 100 years old. So, of course, it's had its time to mature. But you better believe people who bought into the stock market over 100 years ago are pretty rich. So right now we have access to this new market that's just came up. It's newborn. It's just a teenager. And now there's a macro problem with the entire world and what just happened with COVID. All the economies are starting to, shake a little bit. A lot of people being laid off and stuff. So that's what's called the macro environment of business. and it affects all the markets. It affects the stock market, it affects the real estate market, it affects the crypto market, right? So again, because the crypto market is the newest kid on the block, it has the most volatility, meaning the prices go up and down. It's like being in an ocean where the waves are really rocky, right? So the more still the rockiness of the water is in a more calm area, right? So the stock market is the most, well, real estate is the most calm waters, right? But even that, there's times where it really gets rocky. And people believe, again, nobody knows, but people believe this, the real estate market is about to take a super big hit. So when you think about yourself and you think about your goals of retiring or being financially free, it's not just about retiring, because you could just get to a point where you don't need to work anymore, be retired in that way as well, be financially free, right? So if you think about where we are right now in this point in time, we've never had an event like this with COVID and a new market. Well, I guess the stock market was pretty new when the last influenza, thing happened, whatever amount of years ago. But with crypto, we are also changing the the type of finance we can do around the world. This is also when in a heavy shift of money is changing because of cryptocurrency. The way it flows, the way it moves around the world is going to change. It already has. Most people don't understand that, but the fact that I can send somebody money anywhere in the world in less than a minute, that was not possible before crypto. It wasn't. And now it's possible. So now when money can flow like that, it creates a lot of opportunity. And most of the world does not understand this yet, but they will. They will. And that's where I believe. This is where, again, not financial advice, but I believe once the world understands this opportunity of free flowing money that's not connected to any government, not connected to any centralized players, I believe a lot of people are going to rather have that money than the money of their country and have to bank with a bank that they believe is shady. They rather hold on to their own, right? And it's kind of like, it goes back to the put your money under your mattress kind of idea, where it was told to us that's not a good idea. You don't want to do that. The reason they say that, they used to say that, was because if you just put your money under your mattress, it's not collecting interest. It's not safe, right? People can come and take your money. Well, now cryptocurrency, these developers, these genius developers, figured out a way for you to keep it out of the banks, not under your mattress, keep it safer. No one can steal it without knowing your password. And also, you can do the exact same things the banks do and countries do. You can do it with your own money now and do the same financial technology services, but now we could do it peer to peer. So now I, as a regular person, can lend you money through crypto. I make interest on the money, and we could do it at small increments, which has never been possible. And this is why it's such a huge opportunity. So when you think about the current state of the market and when you think about what's possibly about to happen, you're kind of already seeing it, right? People are losing their jobs left and right. A lot of large companies. 10,000 people laid off, 15,000 people laid off. That is going to cause problems in the market, I believe. Why? Because when people don't have jobs, they're not buying stocks. They're not buying crypto. They're probably selling it if they have any, right? So if I was lucky enough to buy assets and now I don't have a job for a year or two, maybe, wouldn't I start selling some of those assets to cover some of my life costs? That's very possible. That's probably what's going to end up happening in the next year or two. And that's what I believe. Again, it could be wrong because there's also another side to this. This is why they say just dollar cost average and buy no matter what's going on if you can, because nobody can really tell what's going to happen. I've even seen times where with the recession and with less jobs, with these companies firing people, they become more profitable. So now the assets grow in value because they have less people to pay, right? So this is where it gets to be like, no matter what, in any market, there's going to be ups and downs. Even when you think it's going to be in the worst possible time, you can't really time the market. That's another big thing that as soon as I started learning about this, I learned nobody, not even the biggest hedge funds, the top dudes in the world, they can't even time it. And they don't know what to buy either. Because if they did, they would put all their money in the biggest earning thing and that's it. But they have no clue. So they're doing just like us. They're guessing and they're buying as much as they can, as often as they can. The difference with them is they get other people's money. They convince other people to give them the money so they can do it for them. And they charge the fees and they make their money like that. So what I've been on my mission for is to say, look, you can do it without them. You can do a lot of the things that you have people that manage your 401k do. You can learn a lot of stuff. And I know one of the big things I hear is like, yeah, you expect me to work a job all day, then come home and be a financial expert. I'm not doing that. And I'm like, yeah, I get it. That's why I'm building this automation, because I do believe that, yes, you want to live a life. You don't want to be having to look at the market every day and try to understand, oh, is this a good day to, put my life savings to work, right? And this is the kind of stuff that, again, you got to create your own systems. So the reason why I created this startup was because I created a system that worked for the last 2 years. I started it. I tested it myself with my own money. I took out money from my own 401k and I grew it. And I said, all right, this works. Let me try to show it to other people that understand investing. So I had people pay me to be a coach, and I coached them and I showed them what was possible, and I showed them my system. And I said, look, this is what's possible. This is the system I'm using, but you have to develop your own. If you want to just try my system while you're learning, maybe you could develop your own system. But what started to happen was my system was working well. And it's not like I come from finance. I'm a creative person, but I just saw something in the charts that I said, look, I think this is a good system for me. I don't want to have to look every day, all day, every day. I want to see something in the chart and react and go about my day. Build startups, help kids, work on creative stuff. So I did it. And it took me a little bit of time every day, like 10 minutes a day, just to look at the market, see if it's a good time to buy or sell. So I did that. Started training people. And what really hit me, the reason why I started doing this retire your bills thing was because that was all happening when the market was going up. The market was doing very well, going up and up and up. And I was like, oh, of course it was working. The market was going up. If anything would have worked, kind of. So then the market started to come down. And of course, you don't know that the market is coming down as hard as it's coming down while it's happening, but I'm still doing my system and I'm coaching people who are paying me to do it. And one of my clients, he hits me up, he DMs me, he's like, you realize how much more money I have doing your system than I would have had if I didn't do your system? And I'm like, no, I just do it for myself. Really, I don't look at anybody, because again, everybody controls their own bank. They all have their own bank. I just tell people what to do. They do it themselves by hand, and I don't see anything. I don't want to have access to anybody's stuff. That's another big thing, right? Like when you work with these financial institutions, you give them your money. And that's where like the Bernie Madoffs of the world, the Sam Bankman-Frieds of the world, they take your money and you don't even know it. They're buying private jets for your money. You have no idea. So when I started down this path, I was like, I really like the fact that I could teach people, I can help people, and it stays in their entire custody. I never touch anything. So it's not like you're giving me money. I'm just giving you tools and showing you, and it's up to you to press the buttons, right? So he shows me, and he's up a lot more. Like because what he did was, and this is something you could do yourself. He went to one of these portfolio management websites and he put his portfolio in there. And there he knew if I would have just left it alone, what would I have had? Then he started doing my system. And when he looked at his portfolio in that system and compared it to the previous of what he would have just did if he would have just left it there and did nothing, he was up a lot. So I was like, and the market was dropping like hard. And I was like, whoa, okay, this works. So this was like end of last year-ish. So I was like, all right, I need to start figuring out how to one, automate this process more through AI and code, but also teach more people about it, right? Of course, I could teach it on social media, but I got to make people do the work. I'm trying to do, because the coaching, of course, they were able to pay me a lot to deal with them one-on-one, but that doesn't scale because, yeah, that person is doing well, but a lot of people that could have been doing it, I can't spend one-on-one time with everyone. So I said, all right, let me take it to the next level where I do it as like a group where I teach people all at the same time and I figure out how many touch points I need to see if they're doing it the right way and help them. So that's where retireyourbills.com came from. And I said, all right, this is going to be the first cohort where I'm going to try to do this at scale. I got a bunch of people who signed up. Tonight I'm closing the thing. We're going to start next week and we're going to go 8 weeks. I'm going to show people each week what to do with each part of this system. And then they're going to do it. And they're going to keep doing it as long as they want to. But eventually I am making this bot where they can just set the bot to do whatever system they ended up liking, or they could just choose the ones I've figured out. And also my goal is to hire data scientists to look at the market trends and come up with maybe better ideas than I was able to do. The reason why I came up with that strategy and that process was based on my lifestyle, how I wanted to do things. But if there's a robot that can be doing things for me whenever, it could be trading 5 times a day for me when I could be sleeping or on a beach, then that doesn't need to be as catered to my lifestyle. It's just whatever's best, right? So again, because AI takes in data and gives you ideas of what's possible, because nobody knows the future, even AI. All AI can do is project what's possibly going to happen based on probability, based on prior data. So once you look at the probable data and you say, this is 80% likely to happen, then the AI can tell you, hey, this is 80% likely to happen, still 20% likely not to happen. So it's up to you. Do you want to take the chance? And you can do that. So that's where we're heading. But again, that's going to need more people, more funding. I'm already talking to investors and I'm trying to figure out how to bring in just the right amount of money, because another big thing is you don't want to give away too much of the company too early in a startup, because then you end up not owning your own startup. So there's a balance to it. At first, I'm trying to get the first version up in a way that I'm happy with only my own money or personal or family members, right? Or people on the team. So yeah, but at the same time, the real understanding of all of this is right now, the market is pretty down from the all-time highs. If you think about where we were all-time high within the crypto space, within the stock space, the real estate space is still high. The market is still pretty high and they believe it's going to come down. The stock market has come down. The crypto market has come down. So if you think about it in opportunity, where is it best to put your money? Isn't it in places where there's sales, right? If the stock market is still not sales, but in the real estate market, there's still not sales, but in the stock market, there's sales, and the crypto market, there's sales. For me, my own advice, my own financial plan is to put as much in crypto as possible, because then when crypto grows, my money will grow the most. But there's a big thing that crypto does where the other markets don't do, that I've seen. Or they do it, but you have to be at a certain level and have a certain amount of money and all kind of other things to make them work. And that is leverage. So if, let's say I took the same amount of money and I put it in a property, that property could grow in value. It could also cash flow for me. So that's good. Put it in the stock market, it starts to grow. So let's say when the markets all come back, now the stock market's up crazy. The real estate market's crazy. The crypto market's crazy. Now what? You either have to sell it or leverage against it. So with a real estate property, if your property is worth a lot and the bank is willing to let you borrow from it, You can borrow off your property, and then you take that money. It's tax-free. You could either live your life or buy more real estate or buy more stock or buy more crypto. So that's possible, but again, you need the permission of a bank. They need to say yes. So they're going to ask you for a lot of paperwork. They're going to check your credit. They're going to check if you have a job, and they're going to make sure you have enough of a history with the bank that they know you're going to pay this loan back, right? So that they could tell you no. And I know rich real estate investors that have been told no from borrowing off their assets. Stock market, same thing. You can leverage off of your stock market, off your stock portfolio. But again, you have to work with an institution that has to tell you yes. And based off what you have, how much are they willing to lend you? I've heard people borrow 20% off of their real estate portfolio. Again, and these are like top stocks, right? So if you have 100,000 of Apple stock, you could borrow 20K. If you have a real estate asset and you have put in, let's say, 100K into it, they'll lend you a lot of that 100K because they know you already gave it back, and but they understand you still got more to pay for that loan of the house. So they do all kind of math to see how much they're willing to lend you. With crypto, none of that exists. With crypto, if you have the asset and let's say it grew, let's say we have 500,000 in each now because real estate, the property went up in value, but now I want to borrow. I need to ask somebody. They have to tell me yes. Stock market, it goes up in value. It's 500,000. Now I want to borrow. I want to borrow off of it. I have to go to a brokerage or a bank and see if they're willing to lend me a certain amount. Let's say it's 20%. That means I could borrow 100,000 from my new 500,000. With real estate, I would say if the property's not paid off totally, they're not going to let you borrow a lot more. So let's say you can borrow maybe similar 50, 80, 100. With crypto, if that gets to 500,000, I can borrow 350, no problem. And I don't have to ask anybody. That's the major key. No matter what's going on in my life, how bad my credit is, if I lost my job, crypto doesn't matter. If you have value, you can borrow from it. In seconds, you have it and you can use it. That's the major difference. Now, this is where Retire Your Bills came in, because one of the biggest things I see in communities like where I come from, the Bronx and poorer communities, is people don't have extra money to just invest. So I said, all right, what if there was a way to use the money that they do make to invest? But what do most people use their money for? To pay bills. So I said, all right, what if I made it so they put their bill money into a cryptocurrency system, decentralized? You see everything on the blockchain. Nobody's holding their money. They're holding their money in their own wallets that they control under their own mattresses or wherever they want to hold them. And now they can borrow off of that initial money that they're putting in. So let's say you make, I'm gonna make easy math. Let's say you make $4,000 a month and your bills are $3,000 a month. You put the $4,000 into your bank, your own wallet. You hold it. You borrow $3,000 from yourself in your own bank. You pay your bills, but now you still got $4,000. And now what you can do is you can invest a lot of that $4,000 every month. So now if you think about it, let's say you're investing $3,000 a month, still paying your bills. You don't want to get too close to be to your loan. So you're doing 3,000. You're not going too much higher than that. You can go higher than that, but I'll just make it simple. So now you're basically investing $36,000 a year and still paying your bills. So now let's say you go 2 years of putting in $36,000. Now you're at 72,000 of invested money. Of course, it's been going up and down the whole time, but you're paying your bills. You know, you're putting it in, you're paying your bills, and the market's going up and down, but it's going up and down. And then we get back to the bull run. But now you got $72,000 in there. And if the bull run just 2x's your 76,000, that becomes 160 grand about. So now For those 2 years that you just been paying your bills, you are building up an asset that has the opportunity to grow. So now in that bull run, if it just 2x's your 76,000, you turn it into 150, almost 160, actually like 165 almost. Now, if you wanted to do something with that 165, you don't need to ask a soul. You could sell it. When you sell it, you're going to incur some taxes, right? Because if you made that much money, the government wants their percent. But if you wanted to, you can borrow off of that 165 and do something with it without anybody asking, right? So is real estate going to 2x in the next 5 years? Probably not. Some stocks maybe could 2x. I don't think the S&P 500 is going to 2x in the next 5 years. I do believe Bitcoin and Ethereum should 2x in the next 5 years at least. And that's the opportunity. Also, you don't need as much to buy crypto. You could buy $1 at a time if you want. Again, you can use the money you use to pay your bills to buy crypto and pay your bills with the same money. That's the hack. That's the financial hack that I figured out. If you take the bill money and you bring it through your own bank, you borrow to pay the bill, now you have money to invest. That original collateral is investable. And that's the hack. So this is why, you want to understand the markets, because this is a time where things are on sale in crypto. They may get even more on sale, or they may go up. The beauty is this is going to take a long time to really play out because of the macro environment around the world. The layoffs just started happening. We're not going to really see the impact of that for months, maybe even a year. But you pay your bills every month. So if you're paying your bills every month and you're investing still in large chunks, by the time all of this comes back, which it always comes back, this is the way the world is. There's ups and downs. This might be a very tough time, but it will come back. The more you can have in that market when it comes back, the more financially free you will be. So let's take the example of you make 4,000, your bills are 3,000. So now you've been doing this for 2 years. Like I said, you got to 72,000 and then it doubled. So now you add 150, let's just say. Your bills are 3,000. Your bills are $3,000 a month. And now your bank is up to 150. How many months of your bills is that? Let me tell you right now. Let's do the math. 150,000 divided by 3,000. That's 50 months of your bills. Divide that by 12. That's 4 years of your bills. So if by paying your bills in the next 5 years, you could have 4 years of your bills, that's a no-brainer to me. Best thing about this is the money continues to compound. Because you're borrowing off of it instead of selling it, the money's still growing at the rate of all of it. So if you keep the 150 in there, you don't sell it, let's say in the next 5 years, it doubles again. Now you go from 150 to 300. Now that's 10 years of your bills, right? So actually it's probably even more. Let's say it got to 300,000 divided by 3,000 divided by 12, 8 years of your bill. But what happens with compound interest is money becomes more money over time. And the longer you can do it, the more it compounds, the more it grows. And by the end, it grows a lot. So when you look at a retirement plan, which I just got a DM today from a friend who just got a new job, and they were going over the 401k plan with him. And he's like, wow, this is such a scam. And he's like, it's based on a lot of the content I've been putting out. He understands now what he's looking at. And he's like, why would I do this? Like, it doesn't even make sense for me to do this. But what I'm telling him is the problem is it's better than doing nothing, which most people are doing. If you don't do that, you're going to have nothing. And this is a young kid. He's like 20 years old. So in the next 30 years, if he's doing that, even with those systems, the compound will put him in a place where he's very well off. But problem is, I did it too. I didn't do it early enough. I started doing it in my late 20s, and it takes 10 years in the old system to double your money. In this system, I'm kind of telling you, based on historical data, it will take around 5 years to double money within crypto. And that's really being super conservative. It's actually more than that historically. But I'm just going to be super conservative, say every 5 years, the money could double. So that means instead of doubling every 10 years, it's doubling every 5 years. Also, you can invest more of it than with your 401k and those type of stock systems. The government only lets you invest a certain percent of your income, because of course they don't want you putting in too much money and then you don't have money to pay your bills, and then you got to be on welfare and take out of the government, right? So they minimize how much you can invest so you don't put yourself in the poorhouse. With crypto, what I'm saying, you're paying your bills first. You're not over investing. Your bills are paid. And now you're investing a huge portion of the money you made, and now it's doubling every 5 years. So imagine that. Imagine investing, and this is the true math. I'm going to give you again easy math, but the true math is you can invest 70% of the money you make safely. So if you made 100 grand a year, if you came home with 100K a year, you could invest 70,000 a year and still pay your bills. That's not possible anywhere else. But let's leave that very interesting fact alone. Let's say you can only invest 50% of your income a year. There's no other asset class you can do that, because most people do not only make 50% of their bills. You know what I mean? So like, it's not like if I make 100 grand, I live off 50. Most people do not do that. So you're not going to be able to invest 50K unless you do that, which some people maybe, but I've never heard of it. So most people are not able to invest 50% of the income they make. With crypto, like I say, you invest 70%, but 50, let's say 50. So now again, let's do the normal American household. The normal American household, I believe, brings in, I had the stats somewhere, I don't know, it's about 50K a year household. So this is not just one person. 50K a year take home. Now imagine they would be able to invest 50% of that. That's 25K a year. Still paying their bills. In the next 2 years, in the next 5 years, they're doubling that money, right? So let's say in the next 5 years, they put in, let's say 50K and they double it. So let's say 50 and they doubled it in 5 years. So now that 50 became 100. The next 5 years, that 100 became 200. The next 5 years, that 200 became 400. The next 5 years, that 400 became 800. And now you see what compound interest starts to do. That next 5 years, that 800 becomes 1.6 million. That next 5 years, that 1.6 million becomes 3.2 million. The next 5 years, that 3.2 becomes 6.4. The next 5 years, 6.4 becomes 13 million. This is not like imaginary, numbers. This happens, and it's happening. When you see these people who are rich because of crypto, they just bought it early and it grew and they were able to sell it. And it's a real thing. I know people think this is imaginary money. No, it's not. People are paying to buy these assets off of people, and they are taking that cash, and it's real. Will they forever be willing to pay for these assets? This is where it's up to what you believe. I believe innovation can be stopped, and the easier money can flow without being controlled, the more people will do it. But again, most people don't understand that it's possible. So right now, what are they doing? They're just holding on to what was possible before and saying, that's never going to happen. It's fake. One person said this is a big thing. I hold on to my cash because I know they can't take it from me. And I walk around with cash and I'll use cash. I don't trust crypto because somebody can make it disappear at any time. And I told him, you know what? Your government just made 40% of your money disappear overnight. And they didn't have to go into your pocket or your bank account. You know how they did it? They printed up 40% more dollars than they ever have in history. So right now, in the history of America, there was a certain amount of dollars printed. In the last 2-3 years, they've printed up 40% of all dollars in the history of America. That, in a way, is them taking dollars out of your pocket without you even knowing it. So now you go to the store, they didn't take the money out of your pocket, but now that thing just costs more money. So you need to give up more of the money you had in your pocket to buy it. So are they not taking that out of your pocket then? You just don't connect the dot, but it's happening, right? So this is where, again, these genius developers figured out ways where that is not possible. No government could come in and say, we're printing up more Bitcoin. With Ethereum, if something's going to happen on the Ethereum blockchain, the community votes on it and they decide. It's not one rich person that says, you know what, I just want another yacht this year. Let me raise the interest rate on this bank. And let me raise the raise the limit on how much minimum you got to have in my bank to get a fee every month. So now that money pours in for them. They didn't take it out of your pocket while it was in your pocket, but they took it from you. And that's where crypto has the opportunity to change stuff like that. And I think this is where, like, understanding all of this and how it's tied, how it's all connected is really important, right? So when you think about what is your plan during this super sale period, you got to think about, okay, how much money do I make? Of course, you may be making less because you lost your job, right? So now you have to really start deciding, what do I do with my money, right? And this is where what I'm telling people with this retire your bills, maybe you can't afford, maybe you lose your job and you can't afford to do it with all of your bills, but do it with a few of your bills. Like, let's say you do it with your cell phone bill, $100 bill. You put in $125 and you're able to invest almost $90 a month. That $90 every month will grow and grow and grow for you. And one day you'll look up and you have 20 years of your cell phone bill, right? And that's just your cell phone bill. Let's say you got a car insurance, like school loan. What I've seen people do is start with a small bill while they learn and understand it. And of course, I'm going to be putting out content, even though I'm doing the cohort where I work with these people individually and as a group. I'm still going to be putting out content, teaching this stuff on YouTube and everywhere. So follow along that. Sign up for Retire Your Bills, even the email. I'm putting information in that email. I drip out how to do it in the email. So this information, I'm not going to hoard it for people who just pay for my course. I'm going to put it out there. The course is really if you want help, if you want to be in a group environment where people can help you. That's what it's for. I'm going to teach all of this live online for free too. And then the bot is my super hopeful dream that people love this and they want to do it, but they don't want to do the work every day. So they'll just let the bot do it. And of course, they'll pay the fee for the bot so the bot can do it for them. I'm going to pay my own fee because I do not want to do it anymore. I do it every day and I understand the value of it, but I rather not have to do it too. I'm building this for me. And if nobody else uses it, cool. Because I know me and the people that I've worked with are going to use it. So that's the type of startup you want to make. You always want to make something that you yourself are going to use. And even this, right? When we talk about markets, I'm choosing a market to be involved in for my business, right? And this is why I'm saying, like, everything is a market. So I'm trying to sell two things here. I'm trying to sell a course and a community, and I'm trying to sell a software as a service. Two separate markets, right? Some people don't like courses. Some people think courses are scams. Some people don't like communities. Some people do. Some people like software as a service. Some people don't. So I got to tap into different markets for both sides of this. And that's where you see, like, I'm creating content catering to both sides of this and drawing people in that are part of that market. The course community people signing up every day, those people are my market of customer for that side of the business. Once it's very easy and people could just test it with a Netflix bill, then I'll cater to that market with certain marketing and content. But markets, you can't get away from markets. If you're doing anything where you want to make money, especially as an entrepreneur or an investor, You have to understand that market. And the way to do that is watch it. Just watch it. And this is a very good time to watch markets, because this is where markets get really, really crazy, because the economy starts to get a little hairy and markets react. So it's a real good time for any market. One of the biggest markets I remember learning about was the advertising world, right? Because I was a creative in the advertising field. I would always notice that certain times a year we had a lot of work, certain times a year we didn't have a lot of work. But again, I was very young. I didn't understand markets. I understood it's just hot times a year where I'm going to make more money, and there's slow times a year where I'm going to make less. So, but what is that? It was tied to the markets. Why? Because during certain times a year, people spend more money. So advertising agencies hire more people, right? So again, even your own job is tied to markets, right? So when you think about, maybe you got laid off and you're like, what should I do with my career? Think about where the markets that make sense to be in, you can put yourself in that environment, right? And this is why they say, try to project what you see happening and put yourself in that environment somewhere within the market that you believe is going to be the one that makes the most money, or the money that, and also you enjoy doing, right? So for me, this is why, again, I'm doing crypto, I'm doing courses. I think that the online education space is going to explode. I think online education is better than college. And for years I've been trying to figure out this market. I started out by trying to teach people how to create startups, and people didn't want it. So that wasn't a market for me. So I stopped. But I still do it on an accelerator basis. I work with two accelerators. I help startups in two different accelerators. So I'm still doing it. I'm just not doing it in online education. But then when I started creating content around the startups and different things, when I spoke about crypto, the market reacted and people started being like, I want that information. How do I do that? And I said, all right, this is what the market wants. I'm going to give it to them. And then years later, I'm still working on it. And that's the thing. Nothing happens fast. You got to really be willing to put in the grind, put in the time. I've made some money doing this, but I've spent more money than I made for sure. But I see the benefit long term. Me being one of the only people that figured this out, I'm not sure. I haven't heard anybody else who figured this out. Gives me a head start on creating the content and creating the software and creating the courses, where once the market understands this is possible, I will be able to benefit. Hopefully. Again, I could be wrong, but better to be in the game than not, right? So on that note, like, I'm looking at this retire your bills thing and saying, okay, if you're the type of person that pays bills, like all of us, you want to make sure you at least understand what I'm talking about. Because if you're paying a bill every month, you're going to be paying most of your bills. You're going to have to pay to the day you die anyway. A cell phone bill, you can't retire out of your cell phone bill. A car bill, yeah, you can stop paying the car, but guess what happens? This is happening to me right now. Once you pay off your car, a few years later, it's going to stop working and you're going to have to buy another car. So that bill never really goes away. You're going to have to keep paying it. So if you could use that money to have months and years of cushion for that bill, why wouldn't you do it? So if you want to just understand it, go to retireyourbills.com. If the cohort has started already, don't worry. We're going to start them every 2-3 months. And maybe it gets faster over time. But right now, the next cohort is probably going to be in 3 months. Today's the last day. So sign up today if you want to get in on the next cohort. Thank you, retireyourbills.com. And please, please, please spend a little bit of time trying to understand the markets and try to understand this system I'm trying to teach, because I do believe this is game changing. Anybody I've spoken to about it at any walk of life is really, really intrigued by what's possible by using your own bill money to invest. It's really possible. I have a bunch of people doing it. I know it sounds unbelievable, but just sign up for the email and just go through the process, check it out, try it. And hopefully I see you at retireyourbills.com, cohort 1 or cohort 2. Thank you. Have a good rest of your night, day, wherever you're watching this or listening.